Jase, I was also curious because you have a fairly significant allocation to oil and gas in Texas. I'm not surprised by that entirely, but I'm wondering, the context to that investment is oil at what, or how do you look at that?
Yeah, the way we look at it is it's a strategic advantage for us being in our state. We do not have negative pressures on our ability to invest in fossil fuels. In fact, we have good positive pressure. We have expertise in Texas. We have expertise on our own staff. So we're one of the few pools of capital in the world that still has a dedicated fossil fuel investing portfolio. It's 3% of our assets dedicated to that, and then another 3% in infrastructure, which is largely linked to fossil fuels. So we like that investment. We like it from a flows perspective. As other pools of capital are potentially exiting those sorts of investments, traditional oil and gas remains there for us. I think a lot of other folks have seen that as well. Now, lots and lots of family offices, for example, all over the country and the world are stepping into that kind of those opportunities where there might be a dearth of capital. So we continue to see that as opportunities, and we obviously stress test for oil price. We're never going to lock in on just one and that sort of thing because it is very, very volatile. But yeah, we have a real strategic advantage there, and strategic advantages are rare. When we run strategic asset allocation, we always look at something like passive portfolios as being an actual, that's something we should all focus on and look to, because if we don't have the opportunity to deliver alpha, the theme of where we are today, it's absolutely, passive is your friend or at least maybe your frenemy as you're trying to build a diverse, resilient portfolio.
But I have to ask you the question, that is, at what price does oil drop to where your investments, you start looking, you think, maybe not so much allocated to this area right now? Is it 65? Is it 60s? I mean, lower?
I think you just have to have a long-term outlook on oil and gas, and there's break-evens at every different type of E&P and opportunity. So just to throw out a number out there that might be very relevant for fracking, you might say $50 oil.